Is Pi Network collapsing, or is this just the calm before the crypto storm? Let's check this video out to the end. Right now, something strange is happening in the world of crypto. While major coins like Bitcoin are smashing through new highs, Pi Network's native token, PI, is falling fast, dangerously close to hitting its all-time low. Currently trading at around 67 cents, it's barely holding on above the February low of 61 cents, and the numbers don't look pretty. Since reaching its peak of $2.98 earlier this year, PI has shed over 77% of its value, including a massive 25% drop just this past week. So, what's driving this downward spiral? And more importantly, should the Pi community be worried? At the core of the issue is something many investors overlook until it's too late: tokenomics. Month after month, PI tokens are being unlocked in massive quantities. Over 126 million tokens are scheduled to be released this month alone. That's on top of the 4.9 billion that are already in circulation. And this isn't a one-time event. Pi Network has been unlocking an average of 133 million tokens every single month, with plans to release another 1.54 billion over the coming year. With so many tokens flooding the market, the supply is skyrocketing, but demand isn't keeping up. This imbalance is pushing the price down fast. It's like inflating a balloon that's already full. At some point, it's bound to burst, or at the very least, start deflating. Alex Opchakevich, the founder of Opchakevich Research, put it plainly when he said, "Monthly unlocks exceed demand, which greatly affects the value of the token." He, like many others, saw this drop coming from a mile away. Still, despite the bleak numbers, the Pi Network community isn't giving up. In fact, the project recently organized one of its most ambitious efforts to date, PiFest 2025. The event was a full-scale adoption push aimed at proving that PI isn't just another digital coin with no real-world use. And the turnout? Surprisingly massive. More than 125,000 sellers and 58,000 merchants participated. From cafes and boutiques to auto shops and freelance gigs, over 1.8 million pioneers used PI as a form of payment. That's a huge milestone, especially for a token that's often criticized for lacking utility. But here's the kicker: despite this major adoption event, the token's price didn't budge. In fact, it continued to drop. And that's causing even longtime believers to start asking tough questions. If real-world usage can't support the price, what can? At the same time, the broader crypto landscape is thriving. Bitcoin recently surged past $85,000, reaching new all-time highs. Ethereum, the world's second-largest cryptocurrency, is holding strong above $1,850. Investor confidence in the market is up. Meme coins are exploding. Altcoins are rallying. But PI? It's stuck in reverse. From a technical standpoint, things aren't looking too promising either. PI is currently trading within what analysts call a descending triangle, a bearish chart pattern that typically signals further declines unless there's a strong breakout. The Relative Strength Index, RSI, for PI has fallen all the way to 26.18, which officially places it in oversold territory. Now, under normal circumstances, that might signal a potential rebound. But this time, analysts are cautious. There's no real sign of buying interest picking up, and until that happens, oversold conditions might not mean much. Adding to the bearish outlook is the fact that PI has now dipped below its 20-period exponential moving average, EMA. That's another technical red flag. When an asset trades below its EMA, it's generally considered to be in a downtrend. Put simply, the short-term momentum is against PI. So, where could the price be headed next? Some experts believe the token might soon retest its February low of 61 cents, and if that support fails, it could fall even further, possibly below the psychological barrier of 50 cents. On the flip side, if a wave of buyers were to suddenly re-enter the market, there's a chance PI could rally back toward $1.53. But that kind of move would require not just a technical breakout, but a massive shift in sentiment, and that's a tall order given the current state of the project. To understand why sentiment is so mixed, we have to go back to the beginning. Pi Network launched in 2019 with a unique vision: make crypto accessible to everyone through a mobile-first approach. Instead of relying on expensive mining rigs or technical know-how, users could mine PI directly from their phones by joining referral teams and checking in daily. It was easy, it was social, and it quickly went viral. Millions of users signed up. But for years, the token remained untradeable. People accumulated it without being able to cash out. That changed with the launch of the Mainnet, followed by listings on popular exchanges like BitGet, OKX, and MEXC. Finally, PI had a market. But with the doors now open, a flood of previously locked tokens began to hit the exchanges, and with them came a sharp drop in price. To make matters worse, not everyone in the crypto world believes in Pi Network's legitimacy. Bybit CEO Ben Zhou has been especially critical. In a blunt statement, he said, "Yes, I still think you are a scam, and no, Bybit will not list scam." That kind of language isn't just damaging, it's polarizing. Some people agree with Zhou, pointing to the project's long delay in launching tradable tokens as a red flag. Others defend Pi as an innovative project with real potential, unfairly judged by those who don't understand its model. So, where does that leave us? Despite the current downturn, Alex Opchikevich believes Pi Network still has a future if it can survive this turbulent phase. In his words, the project certainly has the potential to compete with the top 10 projects in the future. But survival isn't guaranteed. The next few months will be critical. Will Pi Network find a way to balance its token supply and demand? Will more real-world use cases emerge that can stabilize the price? Or will the market simply lose patience and move on? Ultimately, the fate of Pi Network hangs in the balance. For some, this is the perfect time to buy the dip, believing in long-term potential. For others, it's a warning sign to stay far away. What's clear is this: Pi Network has the spotlight, now it just needs to prove it deserves to keep it. What do you think? Is PI heading for a comeback, or are we witnessing the slow collapse of one of crypto's most hyped projects? Let me know your thoughts in the comments. If you found this breakdown helpful, don't forget to smash that like button, subscribe to the channel for more deep dive crypto updates, and hit the bell so you never miss what's happening next in the world of digital currency. Until next time, stay sharp, stay curious, and keep an eye on the blockchain.